What are dividend ETFs? Visual of a pie chart labeled ETF portfolio, with company logos like Coca-Cola, Procter & Gamble, and Apple. Dividend exchange-traded funds, or ETFs, are collections of dividend-paying stocks bundled into a single investment. By owning an ETF, you're investing in multiple companies at once. Key benefits of ETFs. On-screen text. 1. Diversification. Spread risk across multiple companies. 2. Convenience. One purchase gives exposure to dozens or even hundreds of stocks. 3. Passive management. Ideal for investors who want a hands-off approach. Example: popular dividend ETFs like the Vanguard High Dividend Yield ETF (VYM) or Schwab US Dividend Equity ETF (SCHD) provide access to top dividend-paying companies with just one click. What are individual dividend stocks? Visual of a portfolio showcasing individual stocks like Johnson & Johnson, Microsoft, and ExxonMobil. Investing in individual stocks means handpicking companies that pay dividends. This approach lets you tailor your portfolio to your specific goals. Key benefits of individual stocks. On-screen text. 1. Control. Choose companies you believe in. 2. Higher potential returns. Focus on stocks with strong dividend growth. 3. Custom strategy. Adjust your portfolio based on risk tolerance and preferences. Example: if you believe in the stability of Procter & Gamble or the growth potential of Apple, you can allocate your money accordingly. Comparing ETFs and individual stocks. Split screen visual comparing ETFs on the left and individual stocks on the right. Let's break it down. Here's how dividend ETFs and individual stocks stack up across key factors. On-screen comparison chart. Factor ETFs, individual stocks. Pipe dash 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 pipe. Diversification high, instant exposure to many stocks. Low, requires buying multiple stocks. Pipe. Management passive, minimal research required. Active, requires ongoing research. Pipe. Costs low expense ratios but recurring fees. No fees, but more trades equals higher costs. Pipe. Income stability reliable but lower yields. Higher potential yields, more volatility. Pipe. When to choose ETFs. Visual of a busy professional checking their investments on a phone app. Dividend ETFs are perfect for investors who want simplicity and stability. Choose ETFs if you. On-screen text. 1. Prefer a hands-off approach. 2. Want broad diversification with minimal effort. 3. Are starting with a smaller budget. They're ideal for beginners or those with limited time to research individual stocks. When to choose individual stocks. Visual of an investor analyzing a stock report and making notes. Individual dividend stocks are best for investors who enjoy taking a more active role in their portfolio. Go for individual stocks if you 1. Want higher yields or faster dividend growth. 2. Have the time to research and monitor companies. 3. Enjoy customizing your portfolio for specific goals. This approach is ideal for experienced investors or those with clear income objectives. Risks of each approach. Visual of a stock chart with fluctuations and a warning sign. Both options come with risks. Here's what to watch out for. Risks of ETFs. On-screen text. 1. Limited control over holdings. 2. Expense ratios eat into profits over time. 3. Overlap. Multiple ETFs may own the same stocks. Risks of individual stocks. On-screen text. 1. Lack of diversification increases risk. 2. Dividends can be cut during downturns. 3. Requires significant time for research. Understand these risks and build your strategy accordingly. Combining both approaches. Visual of a balanced scale with ETFs on one side and stocks on the other. Why choose one when you can use both? Combining ETFs and individual stocks gives you the best of both worlds. On-screen text. Example portfolio allocation. 60% ETFs, for diversification and stability. 40% individual stocks, for higher yields and customization. Narrator. This hybrid approach balances risk and reward while providing flexibility. Real-life scenarios. Visual of two investors discussing their portfolios over coffee. Meet Jane and Tom. Jane invests solely in dividend ETFs like SCHD, enjoying consistent cash flow with minimal effort. Tom handpicks individual stocks, focusing on high-yield opportunities. Both are on track to achieve their financial goals, using strategies that match their preferences. Closing scene, call to action. Visual of an investor confidently clicking, buy, on their phone. So, which path will you take? Whether you choose dividend ETFs, individual stocks, or a mix of both, the key is to start now. Your future self will thank you.